Well, certainly it has seen short-term momentum to the upside, and the breadth has been very strong as well. And yet now we have a little downtick in our short-term gauges, and that is really like a chink in the armor of the market, because the downtrend, in my opinion, still does have a hold from a long-term perspective. And that breadth thrust that so many people have been talking about, that is something that is positive long-term typically for the market. But this is a little bit of a different market. You know, it's not a corrective phase, it's a bear market cycle. And that's something that requires a bit more time, a bit more work, like a process, not an event, to really get that bottom put in place. So I think we could see a good retracement here.
So there's like a little more of a burden of proof that, in fact, there's a recovery process underway. So in terms of potential give back of this rally, if we need to surrender to the short-term downside momentum, where does it take us, let's say, on the NASDAQ? I mean, do you think it unwinds the whole rally or no?
I think there's a good chance of that, and I don't think it necessarily needs to happen super quickly. But I say that because that negative long-term momentum still does have a hold, and then with that loss of short-term momentum within that context, it's just harder to sustain or hold on to these gains. Now, we could see higher lows established versus June, but the way things set up, they do look very vulnerable to a breakdown. Maybe that's later in Q4. We suspect that the bear market cycle might last even into the first half of next year. So we're bracing for more downside. If we were to see the S&P 500 take out about 38.15 support, the next support level is around 3,500, so we start to talk about a more significant downside at that point.
Yeah, which, I mean, I guess were sort of popularly discussed downside targets when we were near the lows, so that's been hovering down there for a while, I guess. Apple's an interesting case. It has had such outperformance. It hasn't really moved with the rest of even like the FANG group or NASDAQ 100. It's sort of its own animal here. How is it set up? Is it stretched, or does that tell you that, in fact, it has these kind of leadership qualities that could continue?
I mean, visually it's stretched. Yeah. It hasn't seen the same downtick in momentum that we've seen now for the NASDAQ 100 index. I think there's risk that that happens within the next 1 to 2 weeks, so that's something that we're bracing for. Apple has exhibited upside leadership during the relief rally, and that's actually pretty normal. It seems to be one of the first stocks that folks are very comfortable going back to as a long-term outperformer. So we're looking at the ratios of Apple to the S&P 500, and we're starting to see some signs of exhaustion there per the DeMark indicators, and that would suggest that the pullback at least comes in relative terms, meaning that Apple is not really going to be the source of upside leadership that it was, and that removal from the market could be a problem.
Yeah. 7.5% of the S&P almost at the highs recently, so clearly has a lot of sway. Treasury yields have picked back up. The dollar has picked back up from the recent declines. Oil still seems a little bit stuck down in this $90 a barrel range, WTI. Is that a new downtrend, or is it gathering itself for another run higher?
You know, I think it's a corrective phase that's maturing. If you look at the action in the energy stocks, they seem to be anticipating crude oil coming out of this corrective phase.